Welcome everybody to the Meet Damien channel. I am Damien, and in today's video we'll be talking about GameStop earnings, AutoZone's earnings, Costco's earnings, and Oracle, the company Oracle's earnings, as we look at what they had to report for earnings this week, and then we'll take a look at how that's affecting their stock price on the charts here, and where those stocks might go in the future. And then we'll take a look at any stocks that you guys have here that you want to request. We can take a look at that, and we can also look at some cryptos as well if you guys want to talk about cryptocurrencies. But yeah, let's get started by looking at the earnings for GameStop here. All right. So GameStop, their stock, they jumped on surprise third quarter profit. GameStop shares are up 8.2% in extended trading. This was reported on December 10th of 2024. Shares of GameStop were up 8.2% in extended trading after the video game retailer reported a surprise third quarter profit despite falling sales. GameStop, the original meme stock, posted late Tuesday that third quarter sales of $860 million, down from the $1.07 billion in the prior year's quarter. The average estimate of two analysts surveyed by FactSet was $888 million. GameStop earned $17.4 million, or 4 cents a share in the quarter, after a loss of $3.1 million, or 1 cent a share, in the same period last year. On an adjusted basis, GameStop earned 6 cents a share, above the FactSet estimates for a loss of 3 cents a share, also based on projections from two analysts. GameStop ended the quarter with cash equivalents, and marketable securities of $4.6 billion, up from the $902 million at the end of the same period last year. It goes on here to say in this article from MarketWatch that the Grapevine, Texas-based company said that it completed its previously disclosed at-the-market equity offering during the third quarter by selling 20 million shares of its common stock for approximately $400 million. The company does not anticipate any further at-the-market offerings involving the offer and sale of its common stock during the current fiscal year. The video game retailer also swung to a quarterly profit last quarter. GameStop shares, which were lifted by the return to social media earlier this year of influential trader Keith Gill, also known as Roaring Kitty, after a several-year hiatus, are up 53.6% in 2024 through Tuesday. The S&P 500 index is up 26% this year. The company did not hold a conference call in conjunction with its earnings report. Interesting. So a lot of people feel like this company is dead. Other people are trying to revive it because it's basically it holds a sentimental value to some of these investors out here that want to keep the company going. And when they do that, the shareholders, the board is just going to sell the stock with their at-the-money offerings here, and that's how they're keeping this company alive here. Let's take a look at GameStop stock on the charts here on TradingView. If I go ahead and show you here that GameStop currently at $27.99. And just looking at the daily chart here, GameStop is going through some consolidation that it's seen since the pump up. Looks like GameStop was also a benefactor of the Trump pump when Trump got elected. And we're just doing some consolidation here. Okay. As I can see. It looks like a rising channel, but we'll just say that this is the the flag here. Okay. If GameStop can continue on with this trend of creating this bull flag that it's in right now, maybe with some more good news out there, we might see GameStop at a $41 valuation here. Okay. I have done some previous chart work with GameStop, and this was just using a Fibonacci analysis from earlier this year. The 618 level does have GameStop at $44. So $44 seems to be like the next price target if you're bullish on GameStop. Okay. I also see here some candle closes here. We got a green candle here on Thursday, June 6th, where we got as high as $46. And then we also have a candle wick here that got as high as like $48. So, yeah, I would say my price target on GameStop is going to be in the $44 area range, which just so happens to be where the 618 Fibonacci golden pocket levels at. Okay. If we are going to be bearish on GameStop here, maybe GameStop comes and revisits the levels that it was at before the Trump pump, where we had GameStop trading at $22.60. That also happens to be where the 0.236 level is at $23.18. So maybe that would be the bearish target for GameStop. If I pull out the moving averages here, moving averages are saying that the 50-day is currently sitting at $24. So maybe $24 might also be a price target if you're a bear on GameStop. We also have the 100 moving average here at $23. So there's going to be some support at the $23, $24 area, as I anticipate. That happens to be where we had some price action back in October earlier this year. Okay. So that's the bearish case on GameStop. We'll move on to talking about AutoZone. Take a look at what AutoZone had to report for earnings here. All right. Hey, Steezy, good to see that you made it into the chat. You want me to look at Walmart? Is it overweight? Okay. Yeah, sure. Why don't I just skip right to Walmart since you made that request? And then we'll get right back into AutoZone, talking about AutoZone here. Okay. But you want me to look at I'm assuming you just want me to look at the chart for Walmart. I don't know if there's any newsworthy article that came out, but we'll take a look at Walmart real quick since you made that request. WMT Walmart. I can see right above my head, Walmart's currently trading at $94.25. Walmart had their last earnings on Tuesday, November 19th. They had a surprise earnings beat. They were estimating their earnings to be about 53 cents. It came in at 58 cents. And then their revenue was $169 billion. They were expecting $167 billion. So that positive earnings report has propelled the stock higher ever since November 19th to higher valuations here. Walmart did get a little bit overextended and overbought in the first week of December. You can see on the RSI here. We have 72, 76, and 80 on the RSI. So anything above 70 is considered overbought. The current RSI is at 68.69, so just right on the path to being overbought. Looking at the RSI here, previously in September, it got as high as 82 and 83, and then we saw basically 83 once again here on Friday. So, that's a double top on the RSI being overbought. Not necessarily. I mean, if we're gonna say it's bearish divergence, I mean, yeah, on Friday the 13th in September, we had 84.16, and then we were only able to get like an 83.72 on the RSI for December 6th here on Walmart. So there is, technically speaking, since we're using technical analysis, there is slight bearish divergence, okay, uh, on the daily chart here for Walmart, okay, which makes sense. It means probably means that Walmart's going to be going sideways here. Probably won't be going up anytime soon. I think we have seen the highs have been made for Walmart back on Friday, December 6th, where we got as high as $96.18. I would expect some sideways consolidation, looking something like this. Okay, maybe we get like a bullish rectangle pattern here for Walmart, and I could see us just bouncing between, the $93 level and the $96 level. Okay, for Walmart. At least until this white 21 EMA starts to catch up a little bit, and it is starting. You can see the white line trying to catch up to where price is at. The white 21 EMA is at 90.72. So once we start seeing it get towards like the $93, $94 level, then maybe Walmart might make another push up to higher prices, higher than $96, which it's already been at. Okay. The bearish case is that we come down to that white line right now, where we go down to like $91. Okay. Another bearish case would be we actually come down to the 50-day moving average, which is currently sitting at $85.60 for Walmart. I do like that the stochastic RSI is kind of bottoming out. We would like to see it start to curve up again if we're bullish on Walmart. But if you're bearish, I mean, this stochastic RSI could stay down below for a while, and then maybe you get your bearish targets, and you're able to take your profits on short selling Walmart here. But I after a good earnings report, I just think we're going to see some sideways consolidation. If I was to short Walmart, I would wait until it gets back up to the top of this bullish rectangle, and then maybe short it at like $95, $96. Take profit at like $91, or maybe even take profit below that if it gets to like 90 or below 90. But I wouldn't push my luck trying to short Walmart stock right now. This thing is a pretty solid stock. Okay. Let's get right back into talking about AutoZone. Okay. All right. So we have AutoZone that missed their first quarter profit and revenue estimates here, according to Yahoo Finance. Let me just get rid of this. Okay. Automotive parts retailer AutoZone missed estimates for the first quarter profit and revenue on Tuesday, hurt by higher raw material prices and a stronger dollar. Okay. I also think what's also kind of hurting AutoZone is Donald Trump's talking about doing tariffs, and that's going to affect the prices that they're going to be able to charge people. They're going to have, I think I've read, and it might get into this article here, but I've read in another article that AutoZone plans on raising their prices and passing it along to the consumer so they can maintain their profit margins. All right. Anyways, so this article continues on to say that the auto parts retailers has benefit from do-it-yourself automotive parts demand from consumers buying more to keep their aging cars on the road amid pricey new car market. Although a rise in raw material prices has impacted prices for a range of products, including automotive components. Additionally, as I was saying earlier, a looming threat from U.S. President-elect Donald Trump proposed tariff hikes on imports might also hurt prices of automotive parts. If we get tariffs, okay, the CEO has said that if we get tariffs, we will pass those tariff costs back to the consumer and we'll pass them through. AutoZone CEO Philip Daniel has said in September. Quarterly net sales at the retail rose 2% to about $4.28 billion, marginally lower than estimates of about $4.3 billion. Domestic same-store sales in the quarter ended November 23rd rose 0.3%, compared with an increase of 1.2% a year ago. The company's net income was $564 million, or $32.52 per share in the quarter, compared with $593 million, or $32.55 a share a year ago. Analysts had expected to get $33.55 per share out of this company. Okay. So let's see how that translated to the stock price and the stock over on the charts here. Okay. We're looking for AutoZone, New York Stock Exchange. You can see that. Oof, wow, interesting. AutoZone stock is trading at $3,370 a share. That's interesting. I don't think I ever looked at the stock before. I did not know it was that high. Maybe they should try to do a stock split, maybe make it a little bit more affordable for people. But whatever. I did type in the right AutoZone, right? Yeah, AutoZone New York Stock Exchange. Okay, yeah. Let me just double check something here, guys, real quick. I just want to double check that I got the right price for AutoZone here. Yeah, the stock is currently trading at $3,370. Okay. Like I said, maybe they should do a stock split here. AutoZone, right? Looks like it is in a bullish trend, even though they reported a slightly bad quarter here. If I zoom in a little bit here on the daily chart, we're looking at the daily chart here for AutoZone. We've had some green candles this week. Okay. So I'm assuming that investors just brushed off this this bad quarter that they had, and doesn't really affect them as far as the stock price goes here, because they continue pushing up the stock to higher prices here, even after they reported the bad earnings. Right, the earnings was at $1 less than what they were expecting, and per share, and about $20 million less revenue. But that didn't stop them from bidding up the price of the stock to higher prices after the earnings call around Tuesday. They just bid up the price a little bit higher. Okay. Maybe they see it as a one-off event here. I'm going to say they also reported earnings that weren't that good back in for the period ending in August 2024. I mean, they didn't report good earnings there, and the quarter before that was basically a match. So, yeah, I would have to do a more deep dive on the stock, but the trend is bullish. If I get rid of the moving averages here, okay, you can just see that we are basically creating just higher lows here on AutoZone. Okay. I am a little bit worried about maybe some bearish divergence here on the daily chart. I see that we got a hot RSI that was as high as 72 back in August, and now here we are at like roughly 71. So, yeah, just slight bearish divergence. Okay. I'm expecting more probably to go sideways consolidation here on AutoZone. Okay. But yeah, it looks like this chart has been up and to the right, all the way back to like 2019, 2020. Even after the COVID-19 crash, stocks started going up and to the right. So it looks like they're just going to keep on pushing this. And I believe that the reason being is that this stock is going to do well no matter what the economy decides to do, because if the economy is bad, People are going to hold on to their aging cars and replace their parts with that. The economy is good. Just means that more people will be buying things for their cars as they start to get old, right? Or but maybe buying some nice new parts for their cars, so they're not stock. Stock. You can do some modifications on your cars, on your brand new cars here. Okay, but yeah, if the economy is doing good, then yeah, people will spend money as well. So with that being said, we were looking at kind of like this was looking like an ascending triangle on the price for AutoZone. And if I just measure from like the bottom here in June up to the top that was made here in March, and we just continue on this trend and breaking out here at 33.70. Okay. Looks like the stock could continue trekking along to like $4,218, and that might be sometime by a year from now, in October of 2025. Okay, so that's my price target. This thing could probably go up another $900 on the share price here. Bearish case, maybe we might come down to the moving averages, but the moving averages, they seem to be kind of close. Matter of fact, the moving averages are very close here, signifying to me that we should get an impulse move up on price for AutoZone. If we do decide to come down, maybe we come down to the 200 moving average, which is currently sitting at $3,040. Okay, which would also put us at the bottom of this trend line that we've been trending up for a while here. So maybe like 3,050, 3,040 might be a good area to scoop up some cheap AutoZone. And if you're short selling it, you could do your take profit at that 3,040 level, which also happens to be the high that it made here in June 21st. We got a high as like 3,054. So I would probably make that my take profit on if I was short selling AutoZone here. All right, on to Costco. Let's see how Costco did. Costco's earnings. Costco did beat on earnings as e-commerce sales has jumped up. This article is coming from CNBC. Came out yesterday, Thursday, December 12th. And this is going on to say that Costco topped Wall Street's earnings and revenue estimates. The warehouse club drew more store traffic as shoppers bought jewelry, luggage, and more. E-commerce sales rose 13% in the quarter compared with the year-ago period. All right, and there's Costco for those who don't really know what it looks like. Okay, but that's a Costco store. Costco on Thursday beat Wall Street's quarterly earnings and sales estimates as shoppers were buying jewelry, luggage, and furniture. On the membership-based warehouse earnings call, Chief Financial Officer Gary Millerchip said customers have remained selective with purchases, but he added that they've shown they're willing to spend, especially as inflation comes down, if they see a combination of newness of items, quality, and value. He said Costco's strong sales of meat and produce indicate that shoppers are dining out less and cooking more at home. That's interesting. And he added the retailer has seen a bifurcation with the member, with some who are still spending on high-quality premium cuts and others with a gravitation towards those lower price per pound items across categories like poultry and beef and pork as well. Here's how they did during the first quarter. Earnings per share came at $4.04 versus $3.79 expected. Revenue came in at $62.15 billion versus $62.08 billion expected. In the 3-month period that ended November 24th, Costco's net income rose to $1.8 billion or $4 per share from the $1.59 billion or $3.58 per share in the year ago period. Revenue increased from 57 billion in the year ago period. Costco has benefited from its reputation for selling bulk items at better value as U.S. households feel the cumulative effect of higher food and housing prices. The membership-based club also hiked its annual membership fee for the first time in about 7 years. The quarterly results are the first Costco has reported since the fee increase took effect in September. Costco's membership revenue came in at 1.17 billion compared to 1.16 billion that Wall Street had expected. It jumped by almost 8% year over year, excluding the impact of foreign exchange rates. But on the company's earnings call, Millichap said the membership fee hike didn't have much of an effect yet because of deferring accounting. It represented less than 1% of fee growth in the quarter. Comparable sales of the company increased 5.2% year over year. In the U.S., comparable sales rose 5.2% as well. Customers visited Costco stores and website more during the quarter. Traffic rose 5.1% globally and 4.9% in the U.S. The company's average ticket was up 0.1% worldwide and 0.3% in the U.S., including a negative impact of gas deflation and foreign exchange rates. If adjusted to school bills, average ticket would have risen 2% worldwide and 2.3% in the U.S. Looks like gold and jewelry, gift cards, home furnishings, sporting goods, health and beauty aids, luggage kiosks, and hardware were all up double digits year over year, Millichap said. Okay. So it looks like they're having a pretty solid quarter here, guys. I'll just skip over to where it says e-commerce sales. E-commerce sales rose 13% in the quarter compared with the year ago period. The company is gaining market share by shipping big and bulky items. CEO Ron Vatcher said on the company's earnings call, and it hit nearly 1 million deliveries in the quarter, which was a new record. Online traffic conversions and average order value all increased year over year. Membership renewal rates were 90.4% worldwide, down 0.1%. He said renewal rates are down slightly as it attracts more members through digital channels. He said those signups tend to renew at a slightly lower rate. Yeah. Okay, so pretty solid quarter for Costco. Let's see how that affected the chart here for Costco. We'll go over to TradingView and see what that looks like with Costco. So once again, up and to the right on this stock, Costco is currently trading at $989.35. And looks like it's just continuing under the bull trend, right? The white line, the 21 EMA, is above the green line, which is the 50-day moving average. And that's above the 100-day moving average, the blue line, which is also above the 200-day moving average, which is the red line. So a nice solid bull trend. Ever since like September of 2023. Looks like we had sideways consolidation throughout 22 and 2023, but now we're going up and to the right ever since 2023. Okay. So I'm just expecting this company to just continue the bull trend that it's in. If I just get rid of yep. So I'm just going to draw this line here. Connecting the lows, okay? So, yeah, I just expect Costco to just continue on that trend. I would only get bearish if I see Costco break below this trend, okay? But it looks like the trend is saying that, probably around a year from now in December of 2025, Costco is going to be at like $1,209 per share at the very minimum. Could be even higher than that, as long as it doesn't break this trend. That's the bull case for Costco, okay? The bearish case is that we break trend, and then maybe we might see some support at the $850 level here, or $900 level. Let me go ahead and turn the VRVP, see if that gives us any more data here. And yeah, you can see like we have some high volume here at the $889 level for Costco, which is about $100 below where it is right now. We do have a point of control showing that $735 might be another area where you can expect to scoop up some cheap shares. Where if you were bearish on Costco, $735 seems to be where you should take profit if it even gets down to that level. I highly doubt it because looks like the bull trend is intact as long as we stay above this yellow line here on Costco. So that's the bearish case for Costco, right? Could drop $100 or maybe $200 from where it is right now, and you might be able to take profit on your shorts or scoop up some pretty good value longs in that area. Let's take a look at one more stock here. We'll look at Oracle. They reported earnings this week. Let's take at what they have to say here. Oracle is this article is coming from CNBC. Oracle shares suffered the steepest drop of 2024 after earnings miss. Yikes. This article came out on Tuesday, December 10th here, guys. It says the key points here that Oracle shares had their steepest drop in a year on Tuesday following the company's disappointing earnings report. Oracle also issued a weaker than expected forecast. So they got bad guidance too. The stock is still up about stock is still up about 69% in 2024, headed for its best year since 1999. There's Oracle co-founder and chairman Larry Ellison. And it goes on to say in this article that Oracle shares dropped almost 7%, their steepest decline in a year following the database software vendor's disappointing earnings report. The stock's worst day of 2024 had been a 5.4% decline in May. Looks like that they beat that this week. The shares are still up about 69% for the year, which would be the best performance since 1999. After the close Monday, Oracle share for the second quarter of $1.47, which is trailing analysts' average estimate by a penny. Revenues rose 9% from a year earlier to $14.06 billion, missing the $14.1 billion average that was estimated. Net income increased 26% to $3.15 billion, or $1.10 a share, from the $2.5 billion or 89 cents a share a year earlier. Revenue in Oracle's cloud service business jumped 12% from a year earlier to $10.81 billion, accounting for a 77% of total revenue. A bit of a stumble here for the stock that's created some lofty expectations for itself, says analysts from KeyBanc Capital Markets in a note after the report on Monday. They still recommend buying the stock and said, we will still like Oracle heading into 2025. For the current quarter, Oracle expects revenue growth of 7% to 9%. At the midpoint of that range, revenue would be about $14.3 billion. Analysts were expecting sales of $14.65 billion, according to LSEG. So their guidance is not as good as what analysts were expecting. The company said it expects adjusted earnings of $1.50 to $1.54 cents per share. Analysts were expecting about $1.57 per share. Oracle's biggest growth engine has been its cloud infrastructure business, where it's competing with Amazon, Microsoft, and Google as businesses move workloads out of their own data centers. The business is booming due to soaring demand for computing power that can handle artificial intelligence projects. Oracle said revenue in its cloud infrastructure unit surged 52% from a year earlier to $2.4 billion. Oracle said it just signed an agreement with Meta, or Facebook, allowing the social media company to use its infrastructure to help with various projects related to Llama family of large language models. Oracle Cloud Infrastructure trains several of the world's most important generative AI models because we are faster and less expensive than other clouds, Oracle founder Larry Ellison said in a statement. Analysts at Piper Sandler raised their price target on the stock to $210 from $185 based on continued cloud momentum. They cited Oracle's CRPO, current remaining performance obligations, growth of 20%. That figure points to contracted revenue that has yet to be booked. Okay. So yeah, let's see how that affected the stock for Oracle here. We'll get trade. Guys, if you have any requests, go ahead and leave that in the comments or the live chat. If not, this is going to be a very short stream. If you guys want me talking about cryptos, go ahead and shoot away as well. So yeah, here we go. Oracle. And if you guys are liking this stream, go ahead and smash that like button. Let's see if we can get the likes to match the amount of people that are watching right now. Okay. Yeah. Oracle is currently at $173.39. We're looking at the daily chart here. Down about 1.1% today. If I just zoom in, because they reported their earnings earlier this week, and you can see that Oracle was trading at about $90-ish on Monday, and then they reported their earnings, and then it gapped down on Tuesday. This gap down they opened at $173, and they ended up closing at $177. And then throughout the rest of the week, we've just been trading near the $170 level here. And that makes sense because we have some price support and resistance here back in October, where Oracle was trading at. So after that slightly bad quarter with slightly bad guidance, they brought the stock down to $170 here. Could it go lower? We would have to see it break below the $164 level before we see it go any further down. If Oracle was to continue going down and being bearish, then we have the point of control here. This white line says that we should get some support at $138, $140 level for Oracle. So if you're going to be shorting Oracle, I would take profit at the $140. Don't get too greedy. If you're lucky enough to scoop up some shares at the $140 level for Oracle, then yeah. Looks like $140 will be heavily defended according to the VRVP here. Says that that's where a lot of volume and trading action occurred at that level. Okay. If I put on the moving averages here, you can see that the 200, this red line, the 200 moving average is at the $145 level. So $145, $140 Oracle should be heavily defended at that level. If we do get down there and you're bullish on Oracle, plan to put your limit orders in at like the $140, $145 level. Okay. Yeah. We shall see. I believe that in the near future here, this blue 100 moving average line should give some support at the $167 level. If Oracle decides to creep down any further, I do see some price support action right over here at the $167 level. And then we also have the blue moving average, that 100 moving average is creeping up, and that might get over near the $165, $167 level in the next few weeks to come. So I'm actually expecting short term that $167 should be some support for Oracle. If we break down below that, then yeah, it's going to be lookout below, because we might not get support until we get to $145 on Oracle. Bullish case for Oracle, right? Let me go ahead and clean this chart up a little bit here. The bullish case, if I do a Fibonacci analysis here, let's see, Oracle got as high as about $198, so I'll put that as my starting point, and we'll take it down to this impulse move from $141 here. Yeah. The 1618 level says that Oracle could get up to $233, probably, in 2025 here. Then we have a 2618 level at $290. So we'll see how good that cloud computing business ends up being for Oracle. If we're bullish here, I would expect $233 to be the next price target for Oracle. Okay. But just looking at these Fibonacci levels here, right? You can see that the 0.618 Fibonacci level, which is the golden pocket level at $177, that's kind of where we're at right now. So, we also have the 0.5 level at $170. So, if Oracle decides to go sideways, that makes sense because that is where the 0.618 and 0.5 level is. And yeah, if it gets any more bearish, then if it goes below $170, then like I said, I think this thing could easily go down to $145. Guys, I appreciate you guys coming out to the live stream here. I like to keep these videos short and sweet for the stock market videos, unless I get some requests here, which I haven't gotten any requests for any other stock besides Walmart. So yeah, we can just keep it at that for now. The next time I plan on going live again is Sunday around 5 p.m. We'll be talking about cryptos and cryptocurrencies and seeing what's going on in cryptocurrency world around that time. So yeah, be on the lookout for my next live stream at 5 p.m. on Sunday night, East Coast time. Guys, if you enjoyed this video, please go ahead and click that like button. And if you're new to the channel here and you want to see more streams like this, then go ahead and click that subscribe button so you can come join the Meet Damien community where we analyze stocks, we look at the news that affected the stock, the earnings reports, and then we try to see how that will play out on the charts in the near future. I give you the bearish case and I give you the bullish case, so there is no bias here. We just try to be as realistic as possible with our expectations as to where the stock might go next. But yeah, guys, this has been another live stream here on the Meet Damien channel. I am Damien, and I appreciate you guys coming here. And I'll see you on Sunday, guys. Take care.